All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It's just after 11 a.m. here Central Standard Time on Wednesday, the 10th of February, 2021. Another overcast day here in San Antonio. Hopefully, you guys are doing well where you're at. We've had an interesting week. Again, emotions continue to run high. And I get it, guys. I get it. A lot of times, if you follow me on Twitter, a lot of times you may roll your eyes at the things that I post on there, especially in terms of euphoria and sentiment and, market tops and the way things normally happen in those times. But, again, guys, I think probably my biggest asset as far as trading goes is just, a better understanding of people and how that all works. Because at the end of the day, everything you see on the charts, guys, trading is not the charts. The charts just show you what's happened. They show you this movement between fear and greed, and that's what drives the market, guys. Not what's on the charts. The charts are just a visual representation of that. And I think those who actually listen to what I just said there and go, "Oh wow, yeah, exactly," I think those are the people that end up really kind of moving ahead a lot faster. As long as you continue to think that the markets are the charts. You end up getting blindsided a lot of times. You end up with confusion. Why didn't this work out? Why didn't that go that way? Because you're only looking at the results. You're not looking at actually what's driving those results. And that's where I spend a lot of my time focusing on, and where I've really, I started TWC, guys, with just this idea that, hey, I want to actually start combating some of this nonsense I was seeing all over crypto Twitter. And we started off with just a lot of just basic trading, analysis and technical analysis, stuff like that, trying to find the right way to present it. And as we've grown over the last 3 years, we've really started to make a niche into finding our group of people that really are interested in how does the market work? Why is it actually producing charts like it does? What is actually meant by market sentiment? Why isn't my Twitter feed or my social media feed, why isn't that a good indicator of it? And so we've really kind of go into that. And to that extent this year, guys, we're really going to be branching out a lot more with all that. So, continue to follow me on TX West Capital. We got a lot of, new things that are coming out here over the next, Q1 and Q2 of this year. We're already starting to add some new things in there. And really, if you want to get the full, all of it about it, man, join us at howtotradetowin.com. We'd love to have you there. Tier 3 is the place to be. Tier 3 gets you everything. And I honestly don't think there's a better place for you to learn how to trade, online. I really don't. I've looked at a lot of different services because we've tried to do things that they're not. The things that really matter. Everybody else tries to sell you on some technique or some method rather than giving you a true understanding of what's going on and how to play that. So anyway, we'd love to have you there, guys. You can get us at howtotradetowin.com. Like I said, Tier 3 is the place to be. Even if you just do it for a month, check it out for a month. We've got more content in a month than you can actually absorb, I'm pretty sure. But get in there, go through all the educational stuff, see the setups and things like that, and then decide for yourself. Find out why, most of our members on average stay well over a year with us. Not a lot of people that do what we do can say that. So anyway, let's kind of jump on over here. And as we do, we're going to say hello. Who's here? Let's see. Chris Day, what's up, buddy? First one in. Nevlusian checking in. Hank's here. Let me see here. Oh, man. I'll just call you Dominicus. I'm not even going to try out. I'm going to trip all over myself trying to get that the first name of your screen name in there. Glad to have you here. Let me see here. Jay Quinn believes I have been a little too cautious in my thinking for the last 75 days. Well, prices continue to go where we're looking. So, talking about the bigger picture, I don't think is being too cautious. But, again, most people who are newer to trading are going to think that thing. Most people who, don't have a, 10-year, 15, 20-year, whatever record of trading, they're going to think that it is what it is. We'll see where it all plays out. My goal is to make sure that you all don't jump on this emotionally bullish nonsense train and end up losing everything that you're making along the way, guys. Whether it's stocks, crypto, forex, whatever. That's the goal. If you see it as anything else, then I think you're probably hampered by your own bullish emotional attachment to the market. And, you just want to be careful with that because it ends up, again, guys, you're going to, everybody's a genius in a bull market, right? And instantly those geniuses are wiped out the minute it reverses. Nobody ever sees it coming. It's always out of nowhere. And that's why people tend, there's no reason you should be losing all that money that you're making along the way. So, yeah. Hey there, Amber Lee. Good to see you. I appreciate you, man. I appreciate you. Always glad to have you with me. Hey there, Ethan. Good to see you as well. Data's here. LXT, what's up, buddy? Sir Holt's checking in. Flamin' Gala, what's up, man? I appreciate you. Onyx King is here as well. Let's see here. John Booz, what's going on, man? Let's see here. Christopher Arkski says the VXX is worth playing. Now, a lot of volatility charts are worth playing. I think, again, these if you're looking at like the stock market and whatnot, what's going on there, you guys may have noticed that the candles are getting really, really small. The candle spreads are getting very, very small. There's a lot of overlap. That signals that likely you're coming up to a top area of some sort. And when price attends to that topish area, usually what you'll get is a strong volatility. That volatility, you remember, because I keep telling you, if you're an investor, you want low volatility, so price just rises and keeps going, right? If you're a trader, though, you want that volatility because it gives you, continual opportunities to buy and sell as it goes in. And so usually that volatility comes in, at the tops, whether they're local or longer term. So yeah, definitely watch that. Let's see here. What's going on? Hey, dear. Hey, what's going on there? Let's see. It says, hello, Chris, good day. When do we change the streams over to Doge, the true crypto? Oh, man. Well, you guys that have been following me for, any length of time, you know that I love Doge. It's a fun thing. I don't see a situation in which it becomes some great monetary asset, but it's always fun to be a part of. I think if you're trading crypto, I think you eventually, if not at first, you eventually become a fan of Doge and, you learn to trade it properly. You learn that it's cyclical, it has cycle pumps that return back to base and everything. It's not a difficult thing to trade, really. It just takes time to play out. And then the pumps work out pretty quickly. And then it takes, moves on back. But great coin. Love it. It's a lot of fun. Let me see here. Hey there, Sharon. I appreciate you. Thank you. Baker, what's up, man? Esteban's here as well. So good to see y'all. So what are we looking at here? Well, if you attended Monday's stream, you'll know we were talking about this top up here and the pullback. And so that's what we've had. So if you were there at that point, you were well ahead of it. Right now, I think we got about a 10% pullback so far. Let me see here. Just over 9% on that pullback. Overall, I mean, again, I still think we've got higher up here, but, you always want to be aware of what may be going on. And a lot of that is because of how price has extended as it's moved. So, the tendency when you're seeing that waves are extending like they are, you tend to keep that in mind and you continue to look for more and more extension. But, at some point that extension stops and you just want to be aware of when that could happen. So right now, I mean, I think we're looking at wave 4 right now. Our initial target was this high volume node right here around 43.6, 43.7, right around this area here. And that's where we're getting this bounce right now. But if I look at it, we've got an A, we've got a B, and then we've got a 1, 2, 3. I believe we've got a 4 here. Could go up a bit higher here. You've got the 38.2 right here around 45, 124. But looking for that pullback to continue down here. And so if we pull back from actually this 38.2 up here, if it goes up here to this 38.2, then our minimum wave 5 target is going to be that 61.8 extension of wave 3 here. And so if we make that little bit further push up there toward that level, then we should see wave 5 minimum kind of trying to get to this 42.891 sort of area. Now that's always, it's a minimum target, guys. When you're doing Elliott waves, we have these general expectations of price movement. So again, you get a 1, your 2 is going to usually pull back, at least 61.8, maybe 70.5, even 78.6, 85.4. But you're usually at least looking for a 61.8 on the pullback for wave 2. Wave 3 generally extends 1.618 times wave 1. So, again, if you measure out wave 1 here and you put that up there at wave 2, then wave 3 here, it's gone, as you can see, right below the 1618. The 1618 was at 44,263. So a bit beyond that. So that's, again, generally what we look for. We look for wave 4 then to generally pull back 38.2% of wave 3. Sometimes it'll go up to 50%. The general rule for wave 4 is it cannot impede on wave 1 unless it's a leading diagonal or an ending diagonal. In that case, wave 4 can push up in there. Now, there is another caveat to that includes illiquid markets. The more illiquid your market is, the less liquid it is, the more likely to see the spikes and whatnot. So there is, a little mentioned caveat that says, well, wave 4 at times, even if it's not a leading or ending diagonal, can impede on wave 1 in illiquid markets. But even in that case, you're really just looking for a wick into a wick. So like a wave 1 wick and then a wave 4 wick into that wick. So, these are the things we generally look for. And so, especially for the 38.2 on the wave 4, we generally look for wave 5 to at least reach the 61.8 extension of wave 3. So again, if you measure out wave 3 here and we hit the 38.2 retracement of wave 3, then we should get a 61.8 right here at 42,891. And that's how you get your targets pretty easily with Elliott Wave. The key is figure out what waves you're in there. So that would be it. But, again, just because we have that doesn't mean that it has to stop there. We've got our initial target right here, which we've hit. We kind of pull back. I think that's a 3 and a 4, so we should have a 5 coming down at least to that level here that we were talking about. However, I could see it continuing down here to the top of the range. This is that large multi-month range here. So right there around 41,900, 42,000 area, about 42,000 area. That is actually, if we go by this count that I've got on here, that's actually the 38.2 retracement. So again, when I talk about, I said, okay, so wave 3 is generally 1.618, right? So if we go wave 1 here to wave 2, 1618 right there, 48,171 kind of area. And it was 48,200 and a couple of bucks there. So right above the 618. So, the 1618. So that makes that a good likely wave 3. Again, if you come on back here and you measure out wave 3 here. Let me see if I flip this around so that the 61.8 is the 38.2. And as you can see here, that 38.2 right there around 40, it depends on how you pull this exactly. 42,000, 42,100 right here at the top of, again, this larger range right here that we're looking at, if we're looking at this via Wyckoff. And so that's what you would expect to see. If this is going to be bullish and continuation, that you're going to expect a bounce off this area here. You come back, you retest resistance as support, and you head up. So that's, that's our next target on that. If it continues down here below this 42,891, then we're going to look at it potentially getting as far down here as, and I kind of give it this range. I give it the range here of the, this is the 15-minute S3 pivot right there at the EQ of this supply structure, which becomes a demand structure here. So basically kind of this 41,700 to 42,000 kind of area is really kind of where I'm looking for that to potentially get to if we get, continuation below 42,891. But even with that, remember, as I said, that even if we've got that, wave 4 can still pull back 50%, right? And as a matter of fact, like I said, wave 4 can actually pull back even further. Again, your initial target's a 38.2. If it goes beyond that, then you look at the 50%. But beyond that, as long as wave 4 stays above wave 1, you could see this continue pullback into this area here. And this would actually make a lot of sense if we're getting to this point here, because you've got this large pump here and there's no support along the way. It's just a thin line here basically that goes straight up. So you can think about this as a vacuum here that as price gets into it, pulls it back down to your support area. So if we continue on down through the bottom of this structure here at 44 or 450 or so, then I would not be surprised at all to see price kind of coming on down here toward, look, there's an HVN right there, a higher volume node right there, even around 39,420. Now, I don't necessarily expect that at the moment, but, we'll see what happens. You've got to, pay attention to where, to what's going on. You've got to understand what happens if things don't go the way you're looking for them to go. And I think that's the biggest part. One of the biggest holes in a retail trader's trading style is this lack of, okay, they're like, okay, well, I'm just looking for price to get to this point and then reverse and head up here, because in their mind, they're thinking about all the money they're going to make. They're counting their chickens before they're hatched. They're spending their money before they make it in their head, right? But what you need to understand is, okay, well, where is your initial target? And if it continues going through there, what makes sense as a next target? And then you have to look at, okay, how does that define what may be going on? Because here's the deal, guys. Right here, if we take wave A to wave B, another one of the common relationships we look for is wave C to equal wave A. So that happens right here at 44,254, which we're already beyond. Which again, and so why didn't I say that 100% area as my target instead of this HVM? Because the higher volume node makes more sense. The 100% wave C equal to wave A is 100% there. It's just a real generalization. It doesn't always get there. Matter of fact, often it doesn't. It'll move beyond it. So you look for the support areas that make sense. And so that's why we picked the high volume node here, pretty much where we got the bounce. But what I want to bring to you here is anytime you've got an ABC, you need to watch and see how far C is going. Because the closer C starts getting to 1.618, the 1.618, the more the odds increase that maybe it's a 1, 2, 3 rather than an ABC. It doesn't guarantee it, but that further that C keeps pulling to 1.618 and further, the more likely it becomes a 1, 2, 3. Now, but even then, I know you go, oh my God, you're talking about this and that and whatever. But at the end of the day, it would just be a 1, 2. That 3 would be down here around 42,223. And you get a 5 right here at 40,967, which, as you can see, takes you to this previous high, this previous resistance right here. Yeah, okay, I'm just trying to see if there's another. Yeah, look at that. See where this comes right here? Let me throw a line on here for you guys real quick. You see how this comes right into this activity right where all this resistance here? And that aligns pretty perfectly with the 5-wave drawdown there. Now, again, even if that's it, you can get an A, you'll get 3 up, and then you get 5 more down for C. And again, you would do the same thing. Is it is an ABC or is it a 1, 2, 3, 4, 5 going out? So you're always aware. Trading, guys, is not about knowing exactly where price is going to go. It's about understanding where price could go and your invalidation and validation areas along the way. The best way, everybody looks at trading as, or almost everybody, you guys may, agree with this with yourselves, but you look at price movement as this here, right? As you're trading from this to this up here in this diagonal manner, right? In reality, what you are doing is you're trading vertically, guys. You're trading vertically. And and each one of these placed on top of another is where your price is going. Time is what creates this appearance of a diagonal. Okay? So you're really just trading horizontal levels. The diagonal is a, I would call it probably it could be a misleading visual, just because time comes in there and messes with that. But all you're doing is trading vertical levels, guys, which is why it's so important to understand where support and resistance is, where your supply and demand is, as things are playing out. All right? By the way, get this and a whole lot more at howtotradetowin.com, guys. We'd love to have you there. And by the way, hey, guys, if you join howtotradetowin.com, be sure you pay attention that there is a Discord aspect to it, which is where most of our stuff is kept and our interactions are all throughout the day. I know sometimes, it seems like lately we're getting more than a few members who are joining and not being aware. There is a link in your, when you first sign up in your account page here in the top left corner there. It'll say Discord server or something like that. You click on that and it'll take you there. So I just want to make sure that you guys realize that. I don't want y'all missing out on that great stuff that's over there. Let me kind of see what you guys are looking at here. Oh, but by the way, here real quick. I believe I talked about how, again, I used to be a pivots trader for a few years. It's all I did. So there's a certain way that you trade pivots. And when you see price come in sideways between the pivot and the R1, what you're going to expect is either a push up to the R1 and then a retest of the pivot as support for confirmation and then a move up. Or it'll come in sideways and it'll drop down to the pivot, find support, and then push up. If price action's bullish, okay? If you see it coming in sideways and just pushing on through the R1, finding its support, pushing on through the R2 like it's doing here, usually that's a pretty bullish price action there. And our default, when something like that happens, your default thought process should be, okay, well, we should end up going up higher. And usually when it comes in this bullish, when you're getting up through the R2 and maybe even the R3, your eyes generally want to look up here to the R5. All right? Because this move right here is the bullish move that kind of sets the tone. But occasionally you're going to get up through like this and it's going to drop back down and it's going to come on back down. And the problem is if you've made it up above the R2 and you're coming back down to the pivot, most of the time you're going to continue on through the pivot. It was a false bullishness here. It was it looks bullish, but it was driven by something short term, basically, rather than the whole market movement there. Is the way we usually look at it. So if it comes on down through here to these lower targets that I was talking about, it drops on through here, and if you can't get a bounce right here, your expectation should be that price is likely going to come on down here to the lows of the range here. So you've got the range lows here at about 30,000, 30,200 or so. But really what I would be looking for, more likely than not, if we're getting through this area right here, this 35,700 to 37,400, this range right here, if we're getting down below that, you've still got a chance with that S1 pivot, but I think it really starts pushing a lot of pressure on price to drop down to a lower low here. And again, that doesn't mean that this is bearish, guys. This could end up being just reaccumulation before pushing higher. And what that would be a spring. And then, we'll have to watch volume and price action on the way down to it and then volume price action at it. But basically, in something like that, you want to see this kind of thing here where you get the dip below, pop back up, retest, and then head up. You don't want to see this, though. You don't want to see heavier volume on the retest. You should see lesser volume on that retest. That's less supply coming in. Remember, left to its own devices in stock markets and cryptocurrencies and whatnot, price tends to move right and up, or up and right. So all things held equal, price is generally going to want to trend upward. More people buy, right? So you pay attention to that supply that comes in on these lows here. Again, you have your dip here and then you have your test of that dip area there. And so what you want to see is less volume there because it's less people trying to sell into that, which means more acceptance of this as a low. So if it does get down here, that's going to be the big thing I'm going to be looking at. Because again, if you get something similar to this or worse off, I think that's a first pretty decent clue that this may actually be distribution here. So we'll continue to watch out. At the end of the day, there's absolutely nobody out there that can tell you definitively whether this is distribution or accumulation right now, looking at price action and volume. This is phase B still. You've still got this, this interaction between buyers and sellers to a higher degree, giving you these volume spikes along the way. What I told you still stands right now, what I've been telling you, which is if we get this decline, especially down through this resistance here, what you want to pay attention to is the candle spread and the volume there. If you're getting significant amounts of volume coming in on this decline here as it drops on through that resistance there, at least you should be looking for a move down to the lower half of the range. And so in that case, you would get your phase C over here, which instead of getting a spring down here, you would just get what we call a last point of support, which is just basically, for all intents and purposes, it's just a higher low. So, these are the steps that we're going to watch as price makes its way down here to kind of figure out what's going on with all this. And along the way, we'll attempt to mold whatever's going on with the count to it. So, I mean, that's kind of where we're at here at the moment. As you can see, the 1 hour is trying to bounce above oversold here. It hasn't actually hit oversold, though. So it tells you, hey, there's room for price to fall further. Stochc RSI almost bottomed out, but just about bottomed out. It's moving back up here, but now it has room to come on back down again. So price still has the ability to fall further based on these momentum indicators here. On the 1 hour. 4 hour, even more chance on the 4 hour. Again, we've got a lot of room here for price to fall. There is no, if we look at this, let's kind of do it this way. We've got higher lows here, and we've got higher lows here. So there's not even any bullish divergence at the moment, and I think we'll see that on the move up. 4 hour Stochc RSI is still above oversold here. It hasn't even dipped back in to reset into oversold yet. So again, to me, that kind of suggests, hey, we've got some more downside to go here. Another way to look at this, guys, you've got a large candle, a large advancing candle, a small reversal candle, and another large advancing candle. As I told you on Monday, this is why we watch this area as our initial support. Because this small candle going in the opposite direction after these two large candles on either side of it going in the original direction, this provides an area that's telling you, okay, there are buyers here. There are buyers here. So, again, if we lose that, looking at a 4 hour chart, that makes a lot of sense to come on down here toward this, 39,400 maybe at least, or even down here toward, toward this 38,000 kind of area. Because this right here is just basically a black hole. There's no support in this area. Now you can look back here and go, okay, well, there's some support here and here. And yeah, there is. But locally, most recently, there is absolutely no support in this area. So most often when you drop down into that, you're going to get a full drop down to where the support begins. And so coming down here further, like we're kind of expecting to do, I think that's going to give this RSI here a pull down to give us that hidden bullish divergence. So we'll have lower highs here with price, but we'll have lower lows. We'll have higher lows with price, but we'll have lower lows with the oscillator here with RSI. And that, again, is what we call hidden bearish divergence or hidden bullish divergence. And that usually means a continuation of that time frame's trend. And, the 4 hour time frame really is this bullish trend right here. A continuation up of that trend. But that will also take then Stochc RSI down into oversold. This is the ugly thing right now. And this is why you need to be cautious. It doesn't mean that price is going to reverse here and head on down. But, as you can see, we had this right here. You get the doji and then not, in this case, it's the top one. And it came right there at R2, which, it's a doji at resistance. We should be looking for some sort of pullback with that, as I talked to y'all about on Monday. But, again, what you need to see is you need to see a supply candle first, like we're kind of seeing here, to confirm this pullback. But then you need to see another daily supply candle following to give more confirmation of a possible reversal. One supply candle here does not dictate a reversal. It's a pullback. Two, especially if they're larger supply candles, well, that should give you, when you're looking at the candlesticks, that should give you more of a reason to think, okay, there might be some kind of, maybe not just a short-term pullback here. It could still be a pullback down into this area here or even down to the lows. It doesn't have to be a full-on reversal where, it comes on and goes all the way down. But it could lead to that. So the clue is just to keep paying attention to what's going on. Again, with the daily, we've still got this bearish divergence here. Back here from January 8th to, let's see here, yesterday was the 9th of February, so a month basically. We've got higher highs in price. We've got lower highs on the oscillator. So if we can get a more significant movement down, that should confirm this as bearish divergence. And then we should be looking, like I said, at least mid-range here, potentially, and bottom of the range there, as daily Stochk RSI kind of pulls back down and resets. But again, the big thing is what happens here. What kind of volume and price action are we going to get if we get a move further down here toward the range or even into it? So that's what we're going to continue to watch. So, I mean, that's kind of where we're at there, guys. Nothing that I didn't talk about on Monday. So, same thing still kind of holding for what we're watching there. I'm sorry, let me catch up with you guys here. Let me see. Ethan, I don't know if I said good morning to you, but good morning, sir. Good to see you here. Hey there, Sharon is there, of course. Let me see here. All right, what's going on, man? Good to see you checking in. Crypto Mowgli is here as well. Jan Willem V, good to see you as well. Teo checking in. What price did Tesla get into Bitcoin at? Christopher Arkski wants to know. I believe, I don't know exactly. I haven't even looked at it. All I've got is what I've seen. I just haven't had the time with posts and whatnot on there. But, there is a time requirement, a 45-day time requirement that they have to mention certain things with their SEC filings. So, my guess is over the last few months, they might have been acquiring it, which means even if it was toward, beginning January or somewhere around there, I mean, you're looking like a 50% increase in that. So the way you kind of think about something like that is, okay, so this guy gets in there and he buys this stuff without you knowing. And then he mentions it after price has risen. And price has probably risen because of the support, especially if you had to buy some of it at market. So you get that supporting of price and kind of pushing up of demand. Which has caused more retail traders to jump in and buy because, to the moon, 400,000 by next month, all the things you've seen all over Twitter right now. But at this point, he's up 50%, right? He's actually making money with Tesla. Tesla isn't any kind of significant money source. It has been... it hasn't been profitable for its existence. I think it might recently be a little cash flow positive, I think. Or I say cash flow positive. Yeah, they've got $20 billion in cash. But as far as profitability goes, so I think, again, like Saylor, I think the jump into Bitcoin helps them look profitable. One thing that people, that most, people that are retail traders don't understand because they don't have advanced degrees in economics or finance or law degrees, all these things. And they've never ran, public companies and whatnot. But there are all these reporting requirements. And the difficulty for a lot of companies in putting Bitcoin on their balance sheet is the volatility because it affects their reporting. It affects the numbers that they have to report, which in turn affects them. And so for most companies, Bitcoin is way too volatile to put on there because a sudden drop right before a reporting is due could have significant effects on what that reporting means. And, again, these public companies, you guys, I know you often, you're just used to thinking about Bitcoin in terms of yourself as an individual. But at the end of the day, these companies are getting into this have to think in other terms, especially public companies of, shareholders and things that are going on there and regulations and all this other fun stuff. So it's so much more complex than simply, oh, yeah, this company's got all this cash, so they should go ahead and put Bitcoin on their balance sheets. It's a lot more complex than that. But we'll see, we'll see how things turn out. Remember, it's always a double-edged sword, though, guys. I want you guys to continue to think logically. You push Bitcoin as this decentralized move into finance and all this stuff, right? But at the same time, you cheer on and you make idols out of these individuals who come in and concentrate that power. They concentrate Bitcoin. So here's the thing. In much the same way, they're buying, as Michael Saylor, or as Saylor there described their buying process when they bought. And they, they're constantly buying every 30 seconds so much or whatever. While that has a positive effect on price, because that's producing demand, if they need to sell, it won't be quite as organized, because they're going to want to get out before the rest of y'all. They're going to want to sell into you. They have to be ahead of you because they have so much they have to sell. And it's a concentrated supply, guys. It's a lot of supply that has the potential to come into the market. And stop listening to these guys when they tell you, oh yeah, I'm never going to sell. We're never going to sell. It's a part of our company's future and whatever. Because even if they believe that right now, if the situation changes, if something that I've been, talking about regarding, potential depression coming in, deflation of the dollar, stuff like that happens, they would be absolutely stupid to hold Bitcoin. They are going to lose a lot of money over time on that. And I know, again, you got to get out of your me mindset, your individual mindset. And you have to understand that the way that public companies operate are different than the way you operate personally. And so, this becomes a big potential issue. Now, until it does, it's great. All the buying, the demand. That's why I keep telling you guys, you can ride the trend upward. That's fine. While still keeping in mind what's going on a more macro level. What that does is that hopefully helps you to be more aware of where you're sitting in terms of what you need, where you need to exit in order to lock in profits. The problem is that most new traders, most retail traders, guys, they think they get into this emotional market attachment, whether it's stocks or crypto or whatever, and it becomes really difficult for them to fathom the idea of things going down, especially if, heaven forbid, they're actually making a lot of money. Because, again, in their mind, and you maybe have noticed this yourself, you're going to be spending that money in your mind before you actually make it, right? And until you lock in that profit, it's potential profit. You can say, oh yeah, my portfolio was up so much percent right now, but if you don't lock that in, they could drop overnight, knock you out. It's very important to understand where you need to be in and be out, depending on what may happen. Especially if you're, if you're a longer term holder, you have more wiggle room. The shorter your hold is, the less wiggle room you have. These are the realities of the market. But, again, especially as longer term holders, they may be up, say, maybe they might have bought at 10,000. So right now at 45,000, their profit is up 4.5 times, right? But yet they're not willing to lose $5,000 for confirmation that they need to be out. So they'll let it drop 5,000, and then they'll keep thinking it's got to go up, it's got to go up. I can't take a $5,000 loss. Forget the fact that I've got, well, I said 4.5 times, it's 3.5 times. Forget the fact that I'm up, profitably, potentially 300%. I don't want to lose that little bit there. And so they won't get out, and price will continue dropping on them, and they'll continue to hold. And the further price drops, the harder they'll continue to hold until they finally give up. And often that comes right at the bottom. How many people sold on that drop from 6,000 to 3,100 and then didn't buy again at 3,100? Back in December there. Most people. So, again, guys, you have to understand what's going on within yourself. You got to be honest with yourself. Because if you're lying, the only person you're hurting is yourself, right? Let me see here. Chris Varsky wants to know, in asking about what price did Tesla get into, is that a possible floor? It's a possible floor if they were to get in heavy at one area and then attempt to shore up support there. Yeah. But if price drops below that, it becomes a potential signal to start unloading supply into the market. So, that's what that is. The one thing I want you guys to understand here, let me talk to you something. Let's pay attention. God, I got to get out of here soon. But look, here's the thing, guys. You're very bullish on the market. You want to be. That's great. That's fine, whatever. But here's the thing. Everybody's talking about how bullish the market is, but the market has been going sideways here for over a month now. Now, the only reason, remember, I told you markets like cryptos and stocks or whatever tend to move, all things held equal, they're going to move up and to the right. Yet we're only going sideways. So if we're only going sideways, for as bullish as you talk about the market is, somebody's selling. Somebody is selling. These spikes of volume is somebody in there selling, right? And so the fact that it's so concentrated means these are bigger players selling into here. Bigger players that maybe bought at 20, they're up double, or at 10, or we talked about them coming in down here at down here at 3,500, 4,000, and down here at 3,100. That, think about those that bought down here at 3,100 and are still holding here less than a year later up here at 40,000. Do you really think they're not going to want to take some profit? That doesn't mean price has to reverse here, but again, this goes beyond the simple, oh, we're so bullish, it's just a pullback. Well, you have to ask yourself, why is it pulling back? Because somebody's selling. And the significance of those spikes in volume tell you that it's somebody bigger that's selling into this. Now, that doesn't mean price has to turn down, but what that means is you should be paying attention because supply is making itself known in this area. But, again, most retail is just going to, what I just said there, just buy the dip. It's just a dip on the way up. But they're not understanding why is that dip happening and to what degree and what does it potentially mean? Who is causing that? So, and once it drops these significant levels and keeps pushing lower, these bigger players, they're not going to, I find little reason to believe they're going to hold for too long if they're losing money. It doesn't make sense, guys. I know in your mind you go, oh, well, it's going to go up eventually. Well, yeah, but especially if it's a public, like I said, a publicly held company and reporting requirements, this could cause havoc on the value of their company or what's going on with their company, things that get them shareholders. They need, if they're a public company, guys, they need shareholder value coming in. Bitcoin's such a small part of it. And if they're a public company and they're trying to make Bitcoin the big part of it, I think, honestly, they're blowing smoke up your rear end. Because as a public company, number one most important thing is shareholder. Because if you're losing shareholders, the value of your company sinks. It doesn't matter what your Bitcoin's doing. The value of your company sinks. And if the value of your company is sinking, then that limits the things that you can do as far as debt and other things that go out there. Because, again, you need shareholder support. You need cheerleaders saying, hey, listen, this is a great company to be in, to bring in more cheerleaders and continue that. But if you're losing your cheerleaders, it provides difficulty for what you're doing there. Let me see here. Cryptomogly says $0 is the floor. It is the floor, right? Let's see here. I'm sorry, man. I'm totally screwing this up. Julio? Hey there. Good to see you. In bull runs, my stop loss only make me lose profits. I end up buying higher to ride the next wave up. Is it usual? Well, it just means that you're putting your stop loss in areas that are going to get hit. In other words, it basically means that you're really not understanding where your stop loss should be placed. Like I said, if you're joining us on tier 2 or tier 3, you get access to our educational material about markets and why they actually move and, do the things they do. But there's a section that we have on risk management. And if you go through that section, it explains how you should be managing your risk. And in doing that, it lets you know where you can place your stop losses properly and things. And the rest of the course, helps you understand where supply and demand may be coming in and stuff like that. Especially if you get into a tier 3, we have those weekly sessions that we do where I go more in depth on specific techniques and things. But yeah, usually if you find that your stop losses are often getting hit, it's because you're doing exactly what the big guys expect you to do. Again, these bigger professionals, guys, they know where you're looking to put your stop losses and whatnot. And you have to learn why where you're putting them is wrong and how to put them properly. So yeah. Let me see here. Let's see here. Hey, what's going on, Common Man Crypto? Given the news with Tesla and how the rest of the market is behaving, Bitcoin looks like it could run to 70,000. We'll see. I'm putting cannabis stock profits into Bitcoin. Yeah, again, there's nothing here saying that the top's in at the moment. And this is the one thing I keep telling you guys, some people have been following me. They go, oh, you've been so bearish since blah, blah, blah. Well, at the end of the day, guys, you're not really paying attention. We always talk about the possibilities of where the reversals could come from, but the main thing is you ride the trend until it isn't anymore. And so you have to watch. And if this reversal does not happen at these places where it would be likely to happen, well, that's fine. That just tells you it continues pushing up. Otherwise, your choice is to be emotionally bullish, and that works fine until it doesn't anymore. And again, then you get in a situation where I talked about that price pulls back, and you think, oh, it's just dipping, and so I'll buy some more, or at least I won't sell. And then it continues dipping further, and at that point, you're so worried about how much profit you could have had if you had only gotten out at the top, and you're not concentrating on how much profit you do have. And I'm telling you guys, this is what happens with traders most often. They'll get to this point, and then they'll be lucky if they lock in any profit at all. And they could have been up really high many times. Most of the time, they even end up taking a loss. So yeah, you don't want to do that. But yeah, so the possibility is definitely there. Pushing up from here, a move above our swing high up here. I'm looking at probably around, initially around here, around 51,700 or so. But we could potentially see, I've also got a $62,000 target, potentially, depending on how this continues to play out. But right now, we want to see what happens here and how far does this pull back to get a clearer idea of what the count may be in this local area here and what may be going on overall. We never just take a position and say that's all it could be. I've never done that. I've gone through great strides to always say, okay, listen, if it does this, then this. But if it doesn't and it does this instead, then you need to look at this other thing. And in that way, you've always got an idea of where you're looking at in terms of validation and validation levels as price moves. I mean, other than that, you're just kind of wishing and hoping. So, yeah. Hey there, is that IK Crypto or LK Crypto 04? Good to have you either way. Good to see you checking in here. Yeah, don't overanalyze either, guys. I go and I talk about a lot of different things here because again, guys, I've been doing this a long time. I've got a lot of experience and education with all this. But the other part of what I do is that not all of y'all see the market in the same way. So I try to look at it in different ways to kind of give, so some of y'all may see it the one way I'm looking at and go, okay, yeah, that makes sense. And others will go, wait, what? But then I talk about it a different way, and those other people that went, what, are going, oh, okay, yeah, I see what you're talking about now. The idea is just try to make this information as accessible as possible to you guys. But at the end of the day, it's all about keeping it as simple as possible, guys. And that's harder to do the shorter the time frame you trade. If you're a new trader, if you don't have a lot of experience, don't really know what you're doing, you should be trading larger time frames, at least the 4-hour, if not the daily, because it's more forgiving. There's less noise. Noise is all this overlap here. All this up and down over the same area, that's noise. The more you zoom out in time, the less noise there is. But, again, for some of y'all, you feel like you want to be in the markets 24/7 and, you envision yourself as some high rolling, trader out there making $500 there, $10,000 there, $11,000 there, $6,000 there, multiple times a day just going in and out of it. And that's not the reality of it, guys, especially not if you want to be a trader over the long term. If you're doing something like that, most often you're going to lose more money than you'll ever make in general. Let's see here. TV Canal, what's going on? So we should not drop under 37, right, to be bullish? No. We can still come on down here. I know I'm just now getting to your question, so I might have already answered it. But yeah, no. Guys, we could still be bullish on a drop down here. We could still be bullish, sure. Just looking at this real quick here, this could be an ABC and then an ABC. So you get this expanded flat, and then 1, 2, 3, 4, 5 is an expanded flat here for wave 4. So yeah, we could still be bullish down here. Sure. Definitely. Spacebird, what's going on? Oh, you like my explanation there on the diagonal supports and price movement? Yeah. I mean, it's you can see I still watch diagonals, guys. But the reality of it is you are just trading vertically. Time pulls that vertical and stretches it sideways. It distorts it into a diagonal. And that's why so many times when you're trying to look at diagonals for breakouts, a lot of times, it won't break out as you expect. And you'll have to readjust versus if you're looking at verticals, I'm sorry, horizontals. Your horizontals often, if you're picking the right ones there, are going to be exactly where you need to see, which is why, again, my support and or my supply and demand structures work out so well. Again, back over here, I had drawn this back over here, and here we come dropping that right to the EQ. Now, not all demand and supply are wicks. Demand and supply also comes with consolidated price action. But if there's one tip I can give you guys, always pay attention to your wicks. Some people come in and they'll come up here and they'll just, let me see here. Let me see. Do they have it? I got to think about where this is now because I never do it. Let me see here. They go to settings for the chart and then symbols here. Let me see. Oh man, where is it? What I'm looking for is the removal of the wicks there. Oh, here we go. So see these wicks right here? And they'll turn them off so they're just the candle spreads. And I know people that have been trading for 20 years and they trade like this. And they do all right. But I'm going to tell you what right now, if you're really interested in what's going on in the market, you've got to have your wicks. Your wicks tell you a lot of information about what's going on with the traders in that market. They give you great areas of support of demand and supply as price moves. So they're great targets. So that's just a real quick thing on wicks there. Let's see here. Hey, what's going on, Sver? Good to see you. I hope I said that right. It's S-V-E-R. Let me see here. DJ, good to see you checking in. Better late than never. Chris Farsky's asking, in a deleveraging deflation environment, is dollar king? Bitcoin and equities would crash in this case to gain liquidity and fill margin requirements. Yeah, I mean, pretty much. Yeah, if you've got a deflationary environment, I mean, there are stocks you can still buy, guys. If the market, it's like Bitcoin. Remember Bitcoin when it went, when we had that 2018 to 2020 kind of thing there, or even from 2017 to 2018, that year. As Bitcoin price dropped, remember, BNB continued to rise. And then in 2019, whatever, I think the pullback there, remember, Link was moving up. There's always, stocks or cryptos or whatever in the market that'll buck the trend. So there's always that to play. But yeah, generally in deflation, I mean, the safest place is to be in dollar and dollar products. Beyond that, you can go into treasuries, but not just treasuries. You want to look at, I'm sorry, not treasuries, like TLT, something like that. Your long-term security, your treasuries there, because you want to protect your wealth. If the dollar enters deflation, then the markets should drop again because the dollar's gaining strength, which puts the value of things denominated in dollars lower, right? If the dollar's worth more, then things valued against it are going to be worth less, right? So dollar and dollar products are usually where to be. But again, you can look at things like TLT, your investment grade securities as a place to be to protect your wealth. Deflation doesn't last forever, guys. Deflation can be short-lived. We had deflation in 2016. For a very short period of time. Deflation, doesn't have to be there for 5 years or anything. It could be there for 6 months or a year or something, or even just a few months. But you have to pay attention when it is. Unfortunately, with our situation, and, again, guys, everything that I talk about hinges on the idea that we're at the top of a credit bubble, grand super cycle. Our last major top was 1929 there, the beginning of the Great Depression, right there, that spurred on the Great Depression. So, you're looking at 90 years, 92 years. And so that's where the beginning of where I'm looking at everything starts. I had a great question from somebody in our group, in our community of traders there at TWC yesterday. Asked me, they said, man, the stock market continues rising, and where's all this liquidity coming from if the liquidity is actually drying up? Where's all the money coming from to actually, put into the market? If everybody's losing jobs and everything. And a lot of it is something called margin debt. And you guys need to look that up if you don't know. If you're in Discord, check in our macroeconomics finance and channel there. And I'll put a link to a great explanation on it and some charts. But the idea is right now in the stock market, that margin debt is at the obscenely high level, so much higher than it's ever been. So much higher than it was in 2001 there at the internet bubble crash there. Much higher than it was at the beginning of the GFC there in 2008. And what it shows, what the charts will show, is this pull away in margin debt. And even though like the S&P is still rising, it's right, the margin debt's rising at a greater degree, pulling away. And what do we know about things that rise together like that? We know that if they pull away, those things that are pulling away tend to at least revert back to the mean. And so, again, but the degree to which that is risen is just so insanely huge right now. And it's not sustainable, I don't believe. I don't know how you sustain something like that. Let me see here. What's going on, DDH? What is my opinion of a double top scenario in this bull cycle similar to 2013? I think you're talking about, I guess, Bitcoin, right? Let me look at my charts here real quick. Just gonna pull this down here, kind of get a chart. You said 2013. You talking about this double monthly top here? Right there on the monthly. Yeah, it's gonna pull this over. I got so much stuff I kind of just look at occasionally on here. I'm trying to figure out which double top you're talking about in 2013. I don't know. Oh, maybe you mean, you'll have to let me know if you actually mean stocks or Bitcoin here. I don't see a double top in 2013 here. That's the swing high in 2013. It's not really seeing it there. By the way, guys, the big thing about when we first had this decline here where everybody was looking for this further drop down here was, again, when we talk about horizontals, the fact that the resistance was never retested as support. You have resistance, you hit it, you pull back, you hit it, you pull back, and then you broke through, but you never came back down to it to test it as support. And so, again, you have that right here. It breaks out, pushes up above it, comes back, retests this whole area here as support, continues up. But again, we really didn't have it here. Well, I guess I don't know. There's a little bit here, I guess. I'm real sketchy on this one as well. Again, we got this top here. You have the bit of this pullback right here on the weekly. This weekly pullback right here, which gets kind of close to it. But, again, you don't have that kind of thing going on, which is why it still leaves it vulnerable to potentially having price pulling back toward that level. So it's not stupid that somebody would say that, because it hasn't been. It's not even close here. It gets up there. Almost, it pulls back still 80% or whatever above, 70% above where that area was right there. So, I mean, there is some thing to look into that as it plays out there. Let me see here. Again, DXY, guys, it's still 1, 2, 3 waves here. So potentially still just an ABC. I keep telling you this, we need at least another move up above this swing high here, at the very least, right there above 91.6 or so, to kind of at least get us maybe 5 waves. Yeah, you're getting 5 waves at that point, whether that's a 1, 2, 1, 2, 3, or an ABC as a 1 and then a 2. I mean, at the end of the day, you're still having 5 waves, moving up. Right now, as long as it's only 3, price is still potentially, there's still the possibility it could drop down to one more lower low. So we're going to continue to watch it right now. But once we're getting above this, I'm going to start feeling a lot better, above that 91.6. Really want to get above that 95 level up here. 94.9 or so. Really want to get above that 95 level to really start feeling good about the potential bottom being in on the dollar there. So until then, we're going to continue to watch it and play it as it is. But remember, anytime that price is moving up here pretty strongly, you're usually going to get a pretty strong reaction with your other assets that are denominated in dollars. So stocks and Bitcoin and stuff like that. What are my thoughts on Litecoin? Is it undervalued? Guess what, guys? There's bullish euphoria going on right now. Rising tide lifts all ships. I think that's about the best you can say about it. Everybody's going to say why things are undervalued at the moment. But in the reality of it, it's just right now, this price movement is just a product of the market, of Bitcoin, which is the only real fundamental, I think, marker in the whole market. I think if Bitcoin, like I said, it's going up, it brings everything up with it. I've talked about this for years now. If it's going down, it pretty much takes everything with it. I don't think that, because the market's bullish here and everything's popping, that Litecoin's undervalued. I think it's just people are going to get into it. They're going to FOMO into it like they do everything else. And they have. It's gone up quite a bit. So, it is there still. Let me see here. Let me see here. Let me kind of catch up with you guys here. I need to go. We're running over here, but let me just see what everybody else is doing here. Hey there, Paul. Good to see you. And Paul. Paul and Paul joining in about the same time, it looks like, or mentioning the same time there. Let's see here. Oh, guys, let me just kind of scroll down here and see where we're at here. You think he's referring to the 2012, 2013 run up, slight sell off and continuation up? Let me kind of look and see again what we're talking about there. Right here. Let's see here. I think he's referring to the 2012-2013 run-up, which is this right here. Slight sell-off and continuation up. Yeah, but I don't see where the double top is on that. That's all. I don't see where that double top is on that. Put that one right there. Let's see here. Hank's still looking for DXY in the mid-80s. He was almost convinced recently. Almost convinced. I think he was about to throw in the towel. But yeah, we'll see. We'll see what happens with it for sure. For sure. Yes, you mean the double spike here. Oh, this one right here. This one right here. Okay. So this is just 2 weeklies here. This is 1 week after the other. We have something a lot more different kind of playing out at the moment here. Just get rid of all this. Again, you'll notice that generally you have the same kind of movement off the highs. Over here, a little bit, kind of an overextended part here, but you guys have to remember back here, prior to 2014 and really even before 2016, it was still very little involvement, very little money coming in overall. And so now we're at this point. So what I keep pointing out here, guys, is if this is 1, 2, 3, 4, 5. And if this is an ABC, ABC, and then 5 is a very large expanded flat, which, due to liquidity and whatnot, and, the particular market and how young Bitcoin still is, it's definitely a possibility Um, you know, you go here and you go, oh, well, look, it's got to be like this, or it's got to be like this, or it's got to be like this, or this, or this. But it doesn't have to. All of this was all within, if this is a 1, 2, 3, 4, 5, it's all within this first wave here. So they're all going to act similarly. This, however, is a purging of the excess in all of this. Each one of these is just a purging in the excess of what came before it. Okay? This, though, would be the purging of this entire excess over this point here. And so that's why we kind of look at that, guys. I don't know that it's actually going to get back down there. I mean, it's gone up so high now. Could it still? Sure, it could, but I think the odds are reducing significantly. But, again, because of Bitcoin and the way that the wealth is concentrated here, especially now, again, as I talk about Saylor, Elon, Tudor, Paul Jones there, and all these guys, and just one of them putting supply in the market is enough to make the market reverse. If one of them does it, everybody else is going to kind of jump in. So, I mean, it's a lot of significant potential pressure, downward pressure on price that retail is not going to be able to withstand. And what's going to happen is retail is going to join in and sell with them. So we'll continue to see how this plays out here. Right now, again, the trend's up. We continue to look up, but with ideas of what may happen and how that may happen, I think. So, yeah, I mean, you can look at this. I don't know. There's always the possibility. You can have pushing up higher here. Again, my big concern from the way that I generally look at markets is this market sentiment. I recently put out some tweets here, guys. Listen. Let me see here. First of all, I'm really excited and impressed that I didn't really get much in the way of emotional nonsense when I posted this right here. And so what I said was, basically, what if cryptocurrencies are the ultimate in excess and denote the top of the credit bubble? Okay, so, I mean, to be realistic, we're really based on something that doesn't physically exist. And it has no required function, guys. It's purely speculative. So what do I mean by that? I mean, a lot of people often refer to the dollar and go, oh, look, the dollar has, dollar's printed out of thin air and it has no backing or whatever, but it does. First of all, it has the backing by the full faith in whatever the government, credit of the government, which is significant. In other words, the government's going to do what it can to make sure that if you are owed dollars, you get dollars, right? But more importantly, I think, is it has a function in that if you owe U.S. taxes or if you hold U.S. debt, which is held more than any other debt in the world, you have to pay that in U.S. dollars. So the U.S. dollar isn't backed by anything. It has a function. It has a reason for being. Bitcoin has possibilities and it has great things, which I hope end up turning out right. But at the end of the day, there's no reason it necessarily has to remain. It is not required to pay some kind of taxes or something, do anything like that, right? And so what I mean is, this thinking started with the idea of, my son, for instance. He likes to play Fortnite and other games like that. And so he likes to spend some of his money on these in-game items, which are things that don't really exist. If he was to lose his computer or his internet access or something, it's basically money that there's nothing in return. It's money it's vaporware, right? Basically. And so to extrapolate that because of IRS and how they go from money in-game, there's this idea of exchanging dollars for V-Bucks or Robux or whatever, extending that to exchanging dollars for Bitcoin. Same idea. It doesn't really exist except for the belief that people have that it does. Because unlike dollars, which are required for paying U.S. debt, U.S. taxes and U.S. debt, there is no requirement for Bitcoin. So when we think of that and we look at the way that I've shown you guys over the months, how the credit has expanded since the 70s, how much credit has expanded and everything. And then I talked about margin debt today, another form of credit going on there. I've talked before about a potential, maybe a credit bubble within cryptocurrencies. And so what if? What if buying these things that don't actually exist and don't have any reason for existing other than people give them value because they're speculating that somebody else is going to pay more for them later? What if that is the mark of the excess? What if that is the ultimate in excess? To pay money for something that doesn't exist physically. So I was really excited. I had good responses on here. A lot of well thought of things. Very, very little real emotional bias, which was fantastic. This isn't me saying that Bitcoin isn't going to continue on or that it shouldn't. It's just me. It's a thought. It's a thought experiment here, guys. Because at the end of the day, with the credit expansion like it's been, there's just no way credit can continue expanding forever. Is this the top or not? We'll find out. But at some point, those bills come due. You can't overinflate your credit forever, right? Let me see here. And then I wanted to make another couple points here before I go, guys. As I said here, we often pay attention to the differences between large pro traders and retail traders, right? And that way we kind of get an understanding of what may be happening in the market. But remember, major cycle tops are often attended by the extreme bullish outlook in both parties. So, normally we look at, okay, what are the large traders doing and what are retail doing? But at the top of major cycle, when you get to those major cycle tops, the market just goes too far one way. Remember, I told you, you don't want to be in a crowded trade. The more crowded the trade is, the less interest you should have being in it because it's going to come to an end. Historically, that's what happens. The market gets too one-sided. And that's what happens at these major cycle tops. So if you're going, oh, well, all these big money managers and everything are getting into the stock market and getting into Bitcoin and all this, well, okay, great, fine, and dandy. But at the end of the day, this is what normally happens at the top of the major cycles, which is a little different than minor cycles in which you've got a lot more of big players selling into smaller players there. And finally, guys, beware of your fake financial gods and market-directed idol worship. These things happen to pop up in bullish markets. This is, again, we see the memes of Michael Saylor, the savior of Bitcoin, Elon Musk, the king of Bitcoin and Doge. These are the height of emotional attachment, guys, when these things happen. From a psychological perspective, these often denote the heights of, like I said, emotional attachments to the markets. They rarely end up well. Because, again, it's just blind faith in something that you shouldn't have faith really in to begin with. Something that's unproven. Often, and again, it's not, I'm trying to be rude about it or trying to put them down or anything, but these things are what we see in every cycle top, guys. Every market top, these are the things that we see. And the more extreme that market top, the more of this kind of thing we see. So the goal is just to be aware of it. It doesn't mean things turn around tomorrow or next week or whatever, but it means, listen, if you're not paying attention to all the things that have been lining up for the past couple of years now, at the extreme of such a large cycle, you're going to just end up not selling when you should and potentially buying dips that you shouldn't. So you can ride the trend until its end, which is great, but you absolutely have to pay attention to what's going on with everything else in there, guys, okay? Let me see here. Let's see here. Anyway, so that's where we're going to go, guys. I'm sorry, I need to get out of here. I'm already 20% overtime, 20 minutes overtime. Listen, if you'd like a discussion about more of this and so much more, join us over here at howtotradetowin.com. Tier 3 is where it's at. And there is, there's automatic discounts packaged in, guys, if you purchase more than 1 month. So we've got monthly, quarterly, biannual, and annual packages membership that you can purchase. And the larger that time period that you're purchasing up front, the larger the discount on your monthly average. And it's quite significant, especially when you get up to the annual. But Tier 3 is where it's at, guys. That gets you absolutely everything. But definitely, if you haven't done it yet, try Tier 2 at least, because that's got our basic market education stuff on there at least. Plus, of course, it gives you, setups and not setups, but our 20 plus, our 20 assets or whatever that we watch every day, and we give you updates on those. BNB, man, absolutely stupid. Keeps blowing through my targets. It's just been crazy. Again, it's what's going on with the markets, right? So I'm going to get out of here, guys. I hope you guys have a fantastic day. You know, at the end of the day, guys, I'm not here to get you to just, you know, believe and just follow me blindly or anything. I'm here to give you information, explain why I'm looking at things the way they are, and how that, you know, how that kind of goes in with previous periods, and how this all usually tends to work itself out. You know, but at the end of the day, not myself or anybody else knows what any of the markets are going to do. Not even your Fed, guys. Not even your central banks. So we do the best with what we can, with what we know and how we've done it. I've been doing it 25 years, 26 years, I guess now. I'm still here, so I must be doing something right. So hopefully we'll see y'all in Discord. If not, I will be back on Friday at 11 a.m. Central Standard Time. And at that time, we'll have a full market kind of thing. We'll look at stocks and gold and silver and oil and all those other fun things. Take some requests and all right? You guys have a great day. Y'all take care. You trade safe. And remember, the only thing you control in the market is how much you lose. If you haven't taken serious attention to risk management, there's no better time than the present to do it. So get on it, all right? Have a great day, guys.